soil. A fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a few minutes past 1100 UTC. A big shout out to everyone joining the stream live today, and Erica first in the chat for the win. So yeah, really great to start the week off with you all as always. Obviously, a shout out to everybody that's going to end up watching this on recording that might not be able to join us today live as well. Burned, my friend, good question. Another fake out or for real this time? Raphael as well. Everybody's starting to pour in now. So we're going to make today's stream a little bit shorter, a little bit punchier. Good morning, Moral, my friend. And yeah, I mean, we're going to start with our focus on Bitcoin. We'll obviously take a look at ETH as well. And then just want to kind of scope and share out the kind of thoughts on traditional markets as well, or legacy markets, as however you call them, NASDAQ, ES, bits and pieces like that. Look how the market's appetite is for risk kind of starting off the week, and that should hopefully be good. And then that will typically, you know, give risk assets like Bitcoin and crypto a little bit more room to move as well. So without kind of holding proceedings up any further, I've started here on a weekly chart. All right. Now, this is a key level for me. I've been going on about this for a lot of weeks now. For anybody that's either a member with us over at the Bird Nest or joining us on Femex Pulse, we've been looking at this. We caught this downtrend here, this small corrective move, on a weekly scale, you know, gave us a lot of really, really nice short trading because we were targeting this inefficiency lower, this fair value gap. All right. Good morning, Simon. Hello, mate. So the key thing for me is this is the level that's capping the market at the moment, right? Prices come up into here. And as Bernd has kind of alluded to over there, we've had this kind of fake out, right? This deviation, as the legend SC himself would say, you know, deviation, it's got back underneath, it's shown weakness. What's our expectation when that happens? Well, when we take external range liquidity, meaning that we've taken kind of external liquidity here, which is, you know, prices flown up above this, we've deviated, got back beneath, then if we're not showing displacement and strength above this, then our expectation is for price to reach a little bit lower. And it does like to come down and fill these gaps. So we've had this nice reaction. The close of this bullish hammer candle here, or pin bar with a short nose, was the first indication that price was really looking to kind of step back up into the bullish trend. Now, obviously, we never broke trend here. We're simply, you know, as bullish as we can be on here, setting higher highs and higher lows. One other thing I did want to point out as well is how well B Pro has kind of really been helping us kind of stay with the trend on here. This is our in-house indicator at the Bird Nest, the analysts use. So this flipped bullish on January the 23rd. And then that's it, you know, helped really keep us with that trend. Of course, we've had the corrective moves, which are natural. We see these consolidations, but at the moment, price action is still looking super healthy and nice for a move back to the upside. So what are the conditions that we want to see for that? Well, you come up to here, deviation, we've come back down, we found support now, buyers have kind of stepped in, we swept liquidity below this low, all right, drove down into this fair value gap, and then price is now looking to extend a little bit higher, okay? So in terms of weekly targets, well, the kind of internal swing there, and then ultimately we'd be looking for the major swing high up here, which is at 73,666.64 here on Femex. Raz, my friend, how are you doing? Kick my dog, not me, mate. I would much rather kick a person than an animal. So if we look at that and we take that context, and then we want to kind of add a little bit of granularity to that, we're going to move to the daily time frame. Now here on the daily, and again, you can find this shared with members, including free members over at the Bird Nest, and with our family over at Femex Pulse as well. If you're interested in any of those, you can find the links down in the description. But as we stand here, let's just pop on what those kind of daily thoughts are looking like. So as we zoom in, and I'm going to leave the weekly levels on there as well, we can see price kind of hanging around this key level, which was obviously that previous all-time high, not the most recent one, all right, but one of great significance that's capping the market. We have to swing all the way back here, right, that we set in November. Now, while we're kind of looking at this, we're applying the same principles on this chart as we are and as we have done on the daily, all right, on the weekly, sorry. So whilst price holds this fair value gap, for me, it's really, really simple. Price has come back. Again, we've taken the form of external liquidity. Price has corrected down, yeah. It's now rebalancing this fair value gap here. So my expectation, as long as this holds, and what I mean by hold is I want to see the candle not close below it. I don't mind if we get these wicks, right? So like this is absolutely fine, showing absorption, buyers stepping in here, and then we're holding this area. But if we close below it, so to give you an example of this, when we were bearish through here, right? When we got this close above, yeah, violating this, right? That then becomes an inverted fair value gap. We then expect that to go from resistance to support, which it did. So I would need to see something of similar ilk here, okay, for price to close below, in which case then I'd be favoring some intraday plays down to 66,286. As long as we hold this, I am remaining bullish. Now, it doesn't mean, look, if we break down from here, for me, then we're kind of, we're shifting market structure at that point, all right? So higher, high, higher, low, higher, high, higher, low, lower, high, if we set that here and break the low, okay, then we're going to have a market structure shift. However, it's not a break, meaning that price could easily correct down here, all right? We left this fair value gap unbalanced. So if price does break down from here and we show momentum through here, again, on an intraday basis, I would then be targeting this. As long as we're holding within here, then my expectation is for more upside, starting with the high here at 71,761, okay? So now if we break this down onto a 4 hour, let me just turn session breaks off to make the chart a bit cleaner for you guys. Right, now we break down here to a 4 hour. And this is kind of like the most granular that I would want to really be using, sometimes an hourly, but for a kind of higher time frame, right? Considering that we would be using a triple screen system here, right? Meaning that we've got our highest time frame. If that, for example, is the 4 hour, then the 15-minute becomes our intermediate time frame, which is where we frame the trade and then we look to execute on the low minute time frames. Okay. Good morning, Willius. How are you doing, mate? So what we can see here, applying the same principles, the reason I got this here is because we see these untapped highs, yeah, or when you get a collection of untapped lows, they tend to offer really, really good liquidity pools. Anybody that's familiar with ICT concepts will know that as low resistance liquidity, all right? But again, it's just, they're all, price action principles, right? So the idea is that price has failed to take this high, has taken the low, failed to take the high again, taken the low. So while we're kind of driving down like that, these areas leave really, really nice areas of liquidity. So again, whilst price kind of holds this area, we need to remember that we're in a bearish gap here. All right. So the red one, just do it in red so it stands out a little bit more. As price is now drawn up into this, the expectation is for price to sell off. However, the larger gray box in the background, as we always want to give precedence to the higher time frames, okay? As long as for me and my system, certainly it has to apply to the triple screen method. But while we're holding this, yeah, the daily fair value gap, what we really want to see is price kind of come up and close above this. So one way that that could work out is by setting this low here, price could come down, really start to convince people that price is selling off lower, maybe wick down into this 4 hour fair value gap there. Then what we would want to see is a recovery from this. All right. And then we'd be looking to target that liquidity resting up there. We have to remember, while we're still in a 4 hour fair value gap, on the lower time frames, this is still lending itself bearish. However, one thing I would say is we've rebalanced this gap now. Okay. So it does kind of go back to being a little bit more neutral. And what do I mean by that? Well, where we've got the gap from here to here, you can see that we've had wicks out the top of it. So that means that technically the inefficiency has been filled. However, we want to see a close above this really to give us an indication of strength higher. So the safest play would be to wait for a close above here. Yeah, and ideally what you would want to see is price displace above this high, leaving us a fair value gap. We can then look for price to trade back down into that region, head to the lower time frames and take longs. Obviously targeting these highs here, but ultimately our daily and weekly levels which are resting above, okay, because they will be the larger and more reliable draws on liquidity. Now, how can we make that look? Or how does that look, sorry? Well, again, if we're using the same principles, we've come through our London session now, depends if you're someone that focuses on session trading, all right? We had equal lows here, you know, typically amazing liquidity pools, okay? So price has now swept this, and what we would want to see now is a really, really kind of strong reaction here. Now we can see we've got this higher set up over here, and we can also notice that we have this gap, okay? So while this gap is here, it's currently a bearish gap, what I would really like to see is price close through this on a 15-minute scale. And we want to see some kind of pullback. Obviously, if we're looking at this on an intraday basis, and then we would look to target the liquidity higher up, okay? We need to remember still that we're obviously in a higher time frame bearish gap, but the fact that that's overlaid with a daily, if we really catch a good bit of momentum here, I think price could kind of really rip. If not, then we remain patient. Price will ultimately work its way down to our lower levels, and then we'll look to reassess when we get down there, okay? So let's take a look at ETH. Just get this chart all cleaned up for a second. Or actually, we'll leave that on there and take a look at the TA that we did this last week or the week before, see how that kind of played out. So this is the key level for ETH here in terms of where it's reaching for. When we break this down and look at it on a weekly level, price came up engaged with this high here. Okay, so that's now been swept. So we'll do that as a dotted line. And look at the strength in the body of this candle. That is a big weekly candle, okay? Now, we need to wait for this candle to close, right? And assuming that it does close in and around here or lower and leaves us some kind of gap, this can be a really, really interesting place for price to dip down into and find some more buyers. Again, the idea being that the market swings to catch people on the wrong side, generates a lot of liquidity that can then be filled by opposing, whether that's buyers or sellers. So for example, convince the market to go bearish, yeah, drive them down to these key levels, engage all the stop losses, which become market sell orders down here. That then allows larger players to fill bigger orders, okay? Buy orders, yeah, to fill their bids with as minimal slippage as possible and reverse the market. You know, how often do you hear people saying, God, I thought the market was going to do that, but it came back, took out my stop, and then went to exactly where I was targeting, all right? So that's something to always be aware of. However, and we can see that, just to give you an example of some precedent here, we can see when price came up and engaged the higher, had this corrective move, we're down to this fair value gap. Look, we found beautiful support down here, and this is ultimately what then started price on its move higher. So if we do that, however, we're looking a little bit far in the future. We need this whole week to close yet and move down. So while we're bullish, and we're bullish, higher highs and higher lows, right? We've had a nice strong move above this internal high here. Then for me, this becomes the key target at 4098.80, okay? Now, moving this down onto a daily time frame, right? So we can see what we were looking at previously in discussions. You'll see this a little bit clearer on the 4 hour, I believe, but these untapped highs here were our target back here, kind of around about the middle of the month. When price had kind of dropped into this level, again, we were looking for inversions, but we'll look at that a little bit deeper. Just ignore that for the moment. That will be what we'll cover on the 4 hour. So price came and engaged with these relative equal highs here as well, we can see. And then exactly as we've just been discussing on the 4 hour, look what happens when we get that daily candle close here. What did we do? We left this fair value gap here. All right, I'll do that in green just to denote that it's bullish. Yeah. Price then corrects back down into this, holds this. And again, that's what gives price that momentum higher. So while we're here on a daily scale, we've taken that high now. So let's get rid of that. Right, this is the key high that we've engaged with now. All right, price has had that move up into here today, taken out that internal high. So we now need to say, okay, is price going to ultimately have enough momentum to reach up and take the higher time frame level? Any kind of correction lower, and I'd really want to see this level hold here. Okay, so these consolidations, all right, before price moves away, you really want to see these hold. If we really do kind of rip down below that, these are the kind of key areas that you would want to look at for kind of support and resistance flips. Crypto Dick Butt, do you think we should be worried about Grayscale dumping their 10 billion worth of ETH once their ETF starts trading? Think the price could take a bit hit there? Yes, certainly. I mean, look, fundamentals is certainly not my area of expertise. I always kind of give way to the, to the experts around me, people that I work with, like Chris, Crypto Assessor, some amazing gems like Kazi and people like that as well. But, obviously when you think of it from a logical perspective, any kind of major dump like that into the markets can obviously cause a bit of a cascade effect. However, it very much depends how they do it, right? Often these kind of news events and that come with a little bit of a sting in the tail. You're always asking yourself, is it a buy the rumor, sell the news situation? What I would typically do is try and look and overlay that information with the technicals on the chart. So giving myself key levels. So let's say, for example, we were in the current position. Our expectation here is we're holding high time frame levels, key gaps and prices in with bullish momentum. If we started breaking down below these levels, showing weakness, we align that with the news, then that can always be a good time to kind of hedge your positions, right? To cover yourself or, to engage in some maybe kind of intraday shorts until we lose high time frame structure. If we do, then we can flip and align our high time frame bearish bias as well. All right. But definitely a really good point. And let me just pop down the screen. So that's going to, without doubt, be something that is going to affect the market. But always very, very difficult to know exactly how much it's going to do so. But, it's a lot of ETH, right? So you would imagine there would be an effect. However, thinking of it on the other side, how institutions, how major players are going to kind of position themselves in that respect, with having that news in advance could provide a really, really good opportunity again to catch people offside. So one of those things I'll be looking for. I'll certainly be briefing it with my team, but then I'll be definitely looking at the technicals for that as well. So now to just drop this down. Oh, by the way, guys, just for anybody interested, that is 3785.28. That's the kind of order block level that I'd be looking for here. That's if we kind of hold this here, just have a small correction. We'd want to see this area hold. If not, maybe we get a deeper correction back down into here, because when we look at this, we've had a really, really kind of nice run up here. Would be perfectly normal for ETH to correct back down, maybe kind of set low of week Tuesday, Wednesday, before having a further rip. All right. Again, if we come back in, we kind of shift structure here, then I think, we could move lower, but I think we're going to play that out over, a slightly longer period of time. So on our most granular of the higher time frames, just to kind of show what we were looking for before, look, while we kind of had these bearish gaps, we're expecting rejection here. We can see rejection here, price sells off where to? The next liquidity, which is resting below these lows. Then when price came up and closed above this here, we can see the significance of this, right? Price came up, closed above this here, violating it. All right, this is a higher time frame order block, so you don't really need to worry about that right now. You can see how price then flipped this area to support, finding support in this bullish gap, which was not closed below. We then inverted this bearish gap here, which is why it's purple. Once we closed above that, this was the real kind of go time incentive. And it even gave us another opportunity to kind of add to our long positions down here. So kind of overlaying that with current price action, what do we want to see? Well, we have a very, very small bullish gap here. Awesomistic. Hello, mate. Still love that name. Reminds me of like awesome and optimistic together. So we've got a bullish gap here, right? Now, price has come up. We have taken out this high. And now we've taken this one as well. So makes sense to me for price to come down to be looking for some support in here. Now, as we said, we're really not sure if price is going to show a lot of bullish momentum, a lot of bullish strength here. This area could easily hold, and then we move up from here. So while we're in and around here, I'd still be favoring long positions. I would be kind of cautious purely based on the fact that we've had this really, really big run up here. All right. The other thing to look at here, if we do start closing below, Yeah, so if we get a 4-hour close below here, my assumption is that price is going to come down and then seek liquidity here. This will be the key area and the key level here at 38.20, where I'll be looking for that sweep, that recovery, and then for price to move back. However, obviously, if we do take this level out, yeah, and we fail to make any kind of recovery and we start making bearish gaps on the way down, and those bearish gaps are respected, then I would be favoring that we're going to trade lower. Once again, you know, there are some interesting little clusters of liquidity resting down here. Okay, so they're the kind of areas that price can target. Sweep a bit lower, as we said when we look at that high time frame context, would be really, really easy to get everybody bearish, especially on this 4-hour, only for price to kind of correct a little bit lower, to zoom out, you know, go back to our daily, and what looks like a really kind of, you know, bearish move lower, actually from here just ends up price being, you know, and setting a higher low, or even if it sets a lower low, right? You know, that's only a shift. The market loves to catch people offside, and then we can look for that to move higher. Okay. If I wanted to really put a kind of line in the sand here as to where I wouldn't expect price to drop below, I'd be looking at the equilibrium of this. I think we start closing below this, then I think we start heading lower. All right. That would kind of be where I would be on that one. And do you know what, my friend? Chill out. Awesome surname. Let me take a look at that now for you, because I just want to close up. We've got a few minutes left on the stream. We're going to take some alt requests on Wednesday, all right? But let's have a look at ARB. Be nice to kind of overlay this on another chart. But first of all, the other thing that I just want to cover quickly is just looking at the dollar index. Okay, dollar index here is still looking a little bit bearish. This area here was supporting price. We had a very small close below here, right? But now we can see lower highs, lower lows on a daily scale. So while this continues to move lower, and that would be the current expectation, is that it would be really, really good to see that, you know, to see that continue to purge lower, because it normally means that risk markets are going to be pumping. Now, we haven't quite seen that kick in with full effect at the moment on, say, like the NASDAQ or the S&P 500. Yeah. Let's have a look on ES. Right, we took the previous all-time high, we've now set a brand new all-time high here, but look, price is still looking lovely and bullish on this time frame. We're holding this bullish gap here. Wick respected it literally to the dollar. Whilst we hold this, we're looking for ES to push up and kind of drive equity markets in the same way, all right? Now, while that's happening and the DXY is going down, that normally presents a really good environment for risk assets, which are, you know, the S&P 500, the NASDAQ, Dow Jones, technology stocks, but obviously, you know, baskets of stocks like we get in the equity markets with the NASDAQ and the ES. Okay, so while that's driving higher, that paints a good picture for crypto, so keeps us in that kind of healthy crypto positive environment. So let's close up looking at ARB. Yeah. Let's start with a nice clean chart and see where we are here. So, okay, quite interestingly here, first thing that I see is that we have engaged liquidity from the lows here. There's actually quite a nice liquidity engagement here, right? Because we have held this bullish gap beautifully. Price came in, took out not just this low, right, but also the low here. You can see the nice reaction that price had here as soon as it engaged that bullish gap and swept liquidity below here. Now, obviously on a weekly scale, this last week was a really lovely bullish candle. And again, look, if we take the previous high here, I'm just going to do this in black. Okay, when you see these kind of abnormal wicks, for example, yeah, so not quite abnormal, but that one's pretty tall. Look how we kind of get these support and resistance flips. All right, so held below, gets above, dips in, support resistance flip. Again, to use an example on the low, look at this, offers support, closes below here, retests it and sells off. So, you know, why not look the same here? It's not that much of an abnormal wick, but it is the recent swing high, and look how price has displaced above it. Very similar to what happened here, okay? This was the high, price came up, took it, okay, came back down, failed to set a new high yet because it's not flanked by two lower highs. Then when we closed above it, look how it came down and respected that level. You see that really, really clean here on ARB. So on a weekly scale, the things that I'm really looking at here are, first of all, you know, we are engaging with this bearish gap here. All right, so price obviously coming into this on a weekly scale, close above this, and I think this thing can absolutely fly. So to kind of defer to our daily scale, we can see that we have that more kind of granular look here. And actually, this weekly gap here, if we overlay this to the daily gap, we can see how they're kind of stacked on one another. Again, these highs here, this is an intermediate term high. Again, something that I learned from ICT, but again, using the principle that you're looking for liquidity pools, right? So a high with a long wick like this, especially, but any high or low within a fair value gap often present really, really good liquidity pools, all right? So this is the area we're looking for the support resistance flip, which we've got. Again, look at it on that weekly scale. When you draw that weekly high across, look how you can see price on a daily scale closes above and then just holds this area beautifully. The wick's coming down. Again, look, you know, we overlay the same principles. I know I can sound a little bit like a broken record sometimes, but, you know, it really does help with a kind of consistent approach on the market. Price displaces above a high, leaving us a nice gap. Strong close above, draws back down, is now holding this bullish gap down here. Price is ultimately moving higher. The next thing that we would look at here, right, is this order block. Okay, so the down close candles here, we've closed above the bodies of these, you know, so it's now showing that it's ready for continuation. So as long as we kind of hold this area, I would tentatively still be looking long here, right? Now, if we've swept this, and this really is all the fuel we need to move lower, then fine. I think we're going to see that move happen pretty early in the week. But while risk markets are strong, we've got Ethereum kind of leading the market as well. I think, you know, we're in a pretty risk-on environment. So it allows us to kind of skew our risk profile a little bit and kind of be a little bit more aggressive on the lower time frames, okay? So I'm just going to get rid of this at the moment, guys, and then just keep the chart nice and clean. So let's look and put that theory into practice, right? Now, let me just make this grey, because I'm not looking at that. You know, look, if we basically, this is how I'm going to kind of play this out today. I'm looking at this and saying to myself, right, if this is the liquidity sweep here, aligned with that higher time frame liquidity sweep that we got here, price should be correcting into here, following our principle, yeah, as it has done from here. What did we do? Oh, help if I set the right thing. So what did we do from here, right? Came down. We've set this high, taking up this high here, intermediate term high. It's a high within a fair value gap. Price then does what? What we've been covering on the previous time frames. Comes down to fill this gap. Yeah. Now has had bullish expansion. What has it done? It's taken out this high, displaced above it by leaving this gap. So while we're bullish, we retain our bullish bias. We're now expecting price to draw into this gap here before moving higher. Now, what would then flip my bias in this respect? Well, quite simply, one thing again, you know, if we look at all these untapped lows down here that we've got, there's a really nice liquidity draw on price. So if we close below this here, yeah, so price comes down and we get the close below, then I'd be looking price to just have a little bit of a pullback here and then start attacking these liquidity targets lower down. All right, that's definitely how I'd be looking to play ARB today. All right, guys. So look, please also do be aware, you know, of the economic calendar. Just going to kind of refresh this for you guys, and let's take a look at the week ahead. We've actually got a week that's not too dripping in red folder news. All right, we've got CB consumer confidence tomorrow, which hits at 2 p.m. UTC. And then actually, as far as the US markets are concerned, we've got a nice calm week. All right. So that's always something I really like to factor in with that as well. All right. And you're very welcome, my friend. Thank you for the suggestion. Like I said, if you've got any more, guys, we're going to be back on Wednesday for our Alt Request Wednesday. We look at any tickers and charts that you guys have got, and we'll see what we've got ready for the week ahead. All right. Look, I hope you found that interesting. If you do want to find out some more about us, then please do find all the information you need down in the description. I'm going to be live with you guys again on Wednesday. So if you have got any alt charts and bits and pieces you want me to take a look at, please do let me know. And aside from that, wishing everybody a fantastic start to the week. Work hard, take your opportunities when they're there, and certainly don't try and force any trades. Let's see if we can continue this bullish momentum out for the rest of the week. All right, guys, have a fantastic week ahead, and I'll see you around the nest.